Hey guys, I thought I'd go over the weekly plan for the week of 7/21 with a little bit of a video. I've got a disaster of a chart for you, and I'm really tired. So if I sound like it, I am. It's like 12:30 a.m. Eastern right now. Let's orient you first to the chart. So first, I've got our boxes. We've got 5630 to 5708 box, and we've got the 5510 to 5585 box highlighted in white. We have some anchored VWAPs on here, which some of you may not be familiar with, so I thought that would be a good opportunity. Anchored VWAP I've got off the all-time high, so that just takes it's just like an intraday VWAP, but is anchored to a fixed point of interest. So here, being all-time highs, it's red. You can see touch, a little run up above. That was overnight. That does tend to happen. And then a nice touch here. Now from there, another little trick that you can do is called a handoff VWAP. So I'm just going to zoom in a little bit here. So we got this nice clean touch during RTH. So I sort of favored this one. This wasn't a clean touch. This one was pretty clean and also happened during RTH. So I just kind of subjectively chose to go with 10 o'clock for my anchor. So I made a blue VWAP, so it's called a handoff, right? So this one came in, it was active, the red one, and then let's hand it off here at this swing high, and let's see if that remains active. Well, it did, right? So then we could come in here and we can anchor a VWAP, and we could choose this 2 a.m., or we could choose somewhere in here, kind of closer to RTH, and I would say probably put it here at like 8:30, because TradingView anchors to the close of the candle, so it would capture all of this volume and then all of this volume. You could anchor it here, and it would just kind of start here and then go up, and just kind of like look at it and see how it was active. But I bet if I anchored one here, it would just trail down, and it would be active. I have not yet done that. I have our volume profile from last week, and then I have some areas of interest. Purple are generally based off of volume profiles. Yellow is generally support and resistance. Green is generally demand. Red is generally supply. And then white, I kind of outlined these ranges. I didn't mention I've got a white VWAP here. I've got a purple VWAP here. I generally will anchor VWAPs to areas of interest like swing lows, swing highs, and then also I'll do like weekly or monthly, anything that potentially interests me. And if they're in white, it's because they have not proven themselves active yet. Now this one, like maybe I should flip that. I'm going to wait for a second touch. Purple has been active previously. It's further to the left, I won't go there, but it was kind of active here, and then sort of has been active close anyways on the way down. So purple has proven active. Clearly this one here, active, and now maybe active from above. So that's kind of what you're looking at. So like, what are we going to plan to do? So there's two scenarios here: testing lower first, testing higher first. And as I've said a number of times, sometimes testing higher first and failing is more bearish than testing lower first, because if you think about this, we've actually traded a little bit more than halfway through this 10 to 85 box. 48 is like roughly the midpoint anyways. It was also an important value area, weekly value area high from the week of the 23rd. So it was an area of interest. Monitor for reactions there, just about the midpoint. So let's say we get a gap down. So first thing is like, I don't really just want a clean hold of 55.10 again. I don't really want 55.03 half again, even though we used that for this week and captured some fantastic longs off of it. I would want one of two things. So this is the bullish reversal scenario that like comes Monday. If I'm a bull, like I guess, I've been watching 38 to 41. We've been talking about that for a couple of weeks, how we would want to buy it. But the fact that we held off of it so close has me less interested. And that is going to be similar to this situation here, where we talked about in the Discord, where we held off 85. We put in all this buy side volume just above it. To me, that's weak-handed participants like chasing the back test, right? And so they get rugged. And that to me is my concern here. Like it's just right on top. It was 42, I think was today's low. So it has me a little bit concerned. It's still going to be valid for a day trade setup. Look below and fail at Friday's low. That just like comes here. If it plays out overnight, I'm not going to be like super thrilled about it. But if it actually plays out during RTH, and like that's it, we just trend up from there, then okay, fine. But again, I'm far less optimistic about that. So to me, like really the most bullish scenario. Let me explain what happened here. I had posted on X and posted in my feed something that I'd shared with the students in the Trading Doggy Style school. So, what happens is, the market moves in areas of balance and then trend and then balance and then trend and balance and trend, right? And so we put in all this volume here. We had two weekly VPOCs in a row at basically 55.33. We got the breakout from there. We come up here, we establish some volume here, and then we've kind of come up and we've established some volume, in this area right around 5,700. This is actually a pretty thick area of volume. So now once we reject that, and we've traded, we've built new volume here and we've traded past this volume. So like we've rejected a lot of prior value. Once we make that move and we reject this, we're almost certainly coming down here. Now, I mentioned there's different traps that potentially prevent us from getting there. There's a possibility of NQ bottoming before we get there, but like pretty high confidence you're getting there. And like here we are, we're pretty close. So now what, right? So are we going to pass through this, 2 weeks of value and continue to trade lower? Like that would be bad. Like if we lose this box and we're offering this from below, like that's really, really bad. I think, we're probably going to see 8%, maybe 10. I'll have to do the math. We've got a spot we're going to buy if we just like go to hell here. But so to me is sellers come down, they make an attempt, and I'll just kind of like, we'll just look at this as if it were one distribution here. So like 23 to 49. So we put in a lot of volume there. So to me, like the bull scenario is sellers come down, they cross this distribution, they make an attempt here. There's not a whole lot of interest from sellers, and we get a snap right back over it. Now, we've got Friday's low, last week's low at 42. So if we come down here, we reject this. I call that a failed escape. It's similar to a value check, but is there value below here? Are these prices unfairly high or are they unfairly low? So if anything below that is deemed unfairly low, we snap right back over, okay? Now we've reclaimed last week's lows. That's another long setup. So that to me is a powerful long setup. Come down here, rotate, no thank you, and reclaim this week's lows. And then we go. And then we deal with 85 backtest. But to me, the 85 backtest is probably not going to hold for sellers if that plays out. So I'm going to long that. We'll still like manage our positions here. We can hedge, take profits, what have you, just in case. We could come up, do some back testing, and then go. But to me, that's a long if that plays out. We always have to be cognizant of how the week is developing as it plays out, how the day is developing as it plays out, because sometimes you can see these things that look like false breakdowns, and they're actually not, because you weren't looking at like the actual developing profile of the day or the week. So that's like the immediate reversal bull scenario. Come down here, let's say 23 to 26-ish, and then reclaim this week's low, and then rip back up to 85. I think that's a pretty good look for bulls if that happens. So how about trading higher? So we had basically used this range, 17.5 to 22.5. We started using that a couple of days ago for this week, but we had actually used it, for this week. I said 18.5 to 23, I think is what it was, and we had this pre-market on data wick right into 21, and then market makers were kind enough to leave a low volume node there for this week. So basically what happens here is we come down, volume, low volume, volume, all the way down, right? And so if sellers try to sort of reclaim this volume and find value above here, they're going to have to make it up into this distribution here, back into this box, 56.30, maybe above 38 to feel a little bit more comfortable. But if they come up here, this rejects back down. Now we're trapped back in here. And now all of these longs say, well, shit, I'm screwed. And they puke, right? Like imagine you've been bagged in a position, right? You're long from here, okay? And price starts to rally and you're like, oh, thank goodness, I knew I was right. My calls are gonna pay, right? And then this rejects like right below your entry. Like we've all seen this, right? Johnny Dubs definitely. This is like a daily occurrence for him. So it rejects and then Johnny pukes his position, and quits trading for the week. So to me, this is very bearish. If we test higher, fail here, come back down. We could test higher and just fail 85. I mean, that's immediate. We've got this VWAP coming down. This was the handoff VWAP. We've got our primary all-time high VWAP is curling down. Right now, it sits right here, so that's beautiful. We could maybe like just sort of trap just above it because it'll probably be down here early in the week. Trap just above it, back down. Another situation is just coming up to last week's value area low. So like, if we can't build any value above last week's value area low, then it's objectively a short. So quick trap above, back down below 85, and then Johnny pukes his position. So those are the bearish scenarios. 85, back test fail. I guess value area low from last week could come up and fail, back down below 85. You could come up to this LVN, these VWAPs as they curl down, fail, back below 85, and puke to the bottom of the box. Now, let's talk about the bearish continuation scenario. So like, either we trade higher first and then fail through 55.10, or let's just say we just puke straight to hell to start the week, which I don't know, seems less likely. And I mean, this would be very serious if that actually happens. We are getting oversold. The selling has been very aggressive. If we just continue without any kind of reversion or relief, then the market should be considered very weak. And that's sort of like when we talk about a gap down that sees continuation, market's very weak. We see a gap up that goes, the market is very strong. You don't want to fade that. So that would be the situation here if we actually did just like kind of puke. But either way, and again, it's more bearish if we test higher first. To me, it's going to be a more durable short. If we test higher, bag more longs, and then puke, that is much more likely to be durable. But where can we come down to? So to me, like, I don't like really even want to hold 10 again, and I'm not even going to like care that much about 3.5, with the exception of the fact that there is a reason for SPX to hold here. I do monitor both, right? And then similarly, there's a reason for SPX to hold here. We had used 89, so it's 5489.75. It was the RTH weekly low of 616. At least on TradingView anyways. So I would kind of want that taken out first because this to me is a target. Wicks are not support to me. But if it did come down here, maybe like just run this real quick, it would get to SPX. Let's see. I don't have my SPX chart up, but we're like right now at like a 45 handle premium, maybe 44 by the time we get there. So that's like 54, 44-ish. I want to say that was the bottom of like a 3-day balance or something. That was in the 30s. But there was a reason I had for SPX potentially holding here on ES. Below there, we get into this gap. So no RTH volume here. We did have a level from like a pre-market, I think it was 44.62, or maybe that was the old contract and an adjusted price. I don't actually recall, but if it's there, it's something worth looking at. It's not strong. It's just a dashed blue line. Went back to all hours just real quick. We've got this sort of thin distribution here, or minor distribution, at least relative to this area of consolidation here, 54.17, 54.26. After this sort of 46 spot. So this 26.75 was the RTH close, the day, of contract roll, basically for TradingView. So this would be your RTH gap. So regular trading hours high from the prior day before contract roll. And again, it's gonna be different on different platforms. But TradingView seems to work. But anyways, come fill in this gap. Then that's gonna be a lot of eyes on that spot. I'm sure. I'm not super thrilled by that. I would rather kind of come in here, failed breakdown of this 17 spot, rotate back up, see what happens. Pocket of air here, again, RTH gap. You do have this big low volume node that can potentially be reactive. But again, nothing on RTH, so it could act a little bit thin. I start to get interested in here. I'm gonna go back to all hours. I think you can see it a little bit cleaner, all hours. So first of all, I've got this spot that I would really like to buy, 53.69. Seems like a good spot to buy. And we have this VWAP, anchored VWAP, sitting right there right now. Now, obviously, by the time we get there, this anchored VWAP is going to be a little bit higher. So, maybe we're talking about 73 to 76, 53.73 to 76 as demand and a key volume profile area as well. So this whole 69 to 76 area would be fantastic, maybe even up to 81. So I'm definitely eyes on, let's call it 53.69 to 81 and a half maybe. If we sort of, if we get below here, this was a 4.5 week breakout to the upside. We're in a little bit of trouble. Then we could come down 53.34. That would be basically analogous to 41.22 from October. May of 2023 was the breakout month from a multi-month balance. And when we back tested the breakout, we came all the way down into here. So that would be like really gross. I don't see it getting through here. So this could take place over like a couple of weeks if things got really gross. I would definitely buy this and take it for a swing. Where do we close? 55.52. It's only 150 handles. We could do that in 1 week, absolutely. But again, I kind of have to be neutral here because we are getting just a little bit extended. But the selling has been pretty adamant. But if we do get that quick trap lower, again, let's call it 55.23 to 29ish, just below 32. That doesn't make it to the bottom of the box, and then reverse. I'm okay with that. Trading higher, I'm very likely looking for shorts first, and this is where it gets tricky because if you trade higher first, and then you just end up reclaiming 30 and 38 and it goes to the moon, you're trying to short it on the way up, it kind of sucks, right? We've all been there. So, having longs if it's a long, on an intraday basis, really helps with some of that. So you're on runners because like the day has been long, maybe it's Tuesday, we come up in here to 17 after 22, you try a short, you get blown out, but like your long runners keep working, right? So again, I think over 38, you feel really pretty cozy that the bottom is in, but I hesitate to see that trading higher first. I think trading higher first gets rejected, and we at least come down for a retest and try to make a higher low. So again, to me, more bullish to just trap lower real quick and then go. More bearish probably to test higher first and fail. I think that's it. I'll write up the plan, and all of this will be on there. But wanted to go over this and give you a visual, talk about how I use anchored VWAPs, gives you a little bit of insight into what I see in volume profiles, and how we put that together with boxes. And hope you guys all have a great weekend.